Hello. Welcome back, friends, to Alpha Beta Soup. I'm TXMC. Well, we'll talk about the price action we're seeing today on the Bitcoin chart. We'll touch on the derivative space lightly, and then we'll look at some on-chain. In the previous video, we talked about some weakness in the long-term holder group, and I want to continue exploring that today. So we'll touch on a couple other data points that back up our thesis from the previous video and see what else we can find out. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. I appreciate all of your support, and I could not do this without you. Now, let's talk about Bitcoin. Well, Bitcoin is positive today. We've continued to develop off of these lows that we talked about in the last couple of videos, here curling off of around the middle 38s. And, a few days ago when we spoke, I talked about my thought that price would get down to around 38.3. Well, 38.5 was about the lowest we got here on this candle. And we're now developing a bit of a curl on the way back up to the higher end of this parallel channel that we've been bouncing around in now for several months. And just this small amount of price action here has half the people in my Twitter feed going crazy. And it's just always amusing being a member of crypto Twitter. Every time the big dog starts to move, people go nuts. All of their bullish biases are immediately confirmed. All of a sudden, every bear has no idea what they're talking about, and we're going to the moon. It's just funny. It happens every time, even though this is just a mild 12% or so bounce off of the recent lows. Not a big deal in the Bitcoin world, but everyone's really excited. And when I see people going nuts over what is really a pretty small price action move inside of an otherwise boring channel, when I see that kind of reaction, to me, it feels like fragility. It feels like market sentiment has a crack in the veneer. And when you see, just anything at all that you can cling to that's positive and people are glomming onto it, I don't know, to me, that tells me of a weak market, not a strong market. That's my take on it, at least. So we're still developing here. We'll watch this over the coming days. I'm not seeing a lot of evidence that there is bullish momentum just rushing into the door here. There's still a lot of hesitation in this market. People are positioned defensively, and we may still need time to dig ourselves out of this if this is a curl. So for the short term, my next kind of slowdown target, a place where I think we might at least gather before moving up, if that is the new trend, is right around here, right around 43,400, 43,500, middle 43s. This blue line that we're looking at that I'm getting that level from is the median price of the last 30 days. It's just a type of cloud indicator or rolling 30-day median, and price often finds a way to respect it in the short term. So that's my next kind of place of resistance if I'm looking at this the way I normally do. Now, glancing over here at equities, it looks like we're getting a bit of weakness here across the board. The Dow Jones this morning tried to break over its March high, but it wasn't able to get there. And we've got Jerome Powell coming on here in the next hour or so. It'll be interesting to watch how the market reacts to that. If I go hop over here and look at an hourly chart, you can see what happened this morning. There was a gap up, and then we've been fading across the board here. Something to keep in mind as we move through the day here. There's an IMF hearing about the global economy that's going on around noon today, 1 p.m. Eastern, and Jerome Powell is going to be speaking. So I anticipate there will be a little bit of jitters in the market. They'll be reacting to whatever it is that he says. And the market, for its part, is expecting continual rate hikes in the near future. If we look here at the Fed funds futures curve, this represents each of the various month contracts for federal funds futures. These are traders betting on what the federal funds rate will be, and it's a way of getting some alpha to a degree on what the market thinks is going to happen. So right now, the federal funds rate is down here around a quarter basis point, risen from essentially zero that they raised in March. And over here, each of these lines going into the future from the bottom represent the next forward contract in Fed funds futures and the expectation of the market for what the funds rate will be at the end of that contract. So here in May, the market is pricing in a Fed funds rate that is 50 basis points higher than what it is now. If you go forward into June and now in July, it's looking at maybe another 75 basis points. And then moving on into September, it's getting up near 200 basis points, which would be another 50 on top of where we are now. So just looking forward into the next few months, months, the market is anticipating that the Federal Reserve will stick to their plan, that they'll keep moving forward with raising interest rates, as they are wont to do. If you look back through history, they tend to start raising rates and continuing to do so until they hit their targets or the market gives them some kind of gross invalidation of their plan. So we're seeing some corroboration of that here in Fed funds futures. At least through September, October, they're anticipating 175 more basis points of rate hikes. That could come in the form of 250s into 75. Who knows how they chop it up. Now, I expect that if they go to a 50 basis point hike, they probably will not go back to a 25 during this schedule. They've warmed the markets up to a 50. They know that they need to do more than that if they're going to be perceived as seriously fighting inflation. Now, whether or not we think they'll achieve their targets, that's a different topic and one we've covered in other videos. But just in the short term here, the next 3 to 6 months, market participants are expecting the Fed will continue forward with their plan, that sometime by the beginning of Q4, we may be looking at a 200 basis point Fed funds rate, which is a considerable jump from where we are now. And I don't anticipate the road from here to there will be particularly smooth. Now, just quickly glancing at the derivatives space for Bitcoin, looking at options put-call ratios. So this line over here in the bottom right of the screen represents the distribution of volume in the options market between people transacting puts and those transacting calls. Now, people buying puts are protecting themselves from downside. It's a way of insuring yourself against negative price action. And just recently, we've seen a spike in put volumes. Now, I did comment several months ago, back here in early February, late January, we saw rising put volumes for options traders. This was signifying fear in the market, hesitation, and like I said, protecting against downside. And that came at the depths of the market, the recent lows. Well, over here now in mid-April, we're seeing again an elevation of put volumes. So there does appear to be some hedging and defensive positioning amongst the people trading in options. Just something to have in the back of our minds. And something I want to explore for the last few minutes of this video is a continuation of a topic we explored in the last video. So when we talked earlier this week, we discussed long-term holder weakness. And I proposed a theory that I thought that some of the newer members of the long-term holder group, some of the people who had acquired supply here in the last calendar year, those participants were bailing out. They were distributing their coins to others, showing a sign of weakness, a lack of conviction. And we explored some factors that made me think that. And it was partially influenced by seeing the cost basis of these hodlers falling at a time when price is sideways and slightly rising. So we talked about this. Like I said, the cost basis of long-term holders falling. And for that to happen, since they're a group whose cost basis lives in the past by the nature of them being hodlers, to see their aggregate cost basis falling means that members with a higher cost basis are leaving the group, and the remaining members have a lower aggregate cost. And seeing it dip this dramatically, which is one of the strongest declines in this metric in the history of Bitcoin, really exemplified to me that we're seeing weakness out of this group from the newer hodlers. And part of it was corroborated by seeing a growth down here in the portion of supply that's less than 6 months old. So long-term holders are coins that are 5 to 6 months old or longer. So supply that exists down here in this group is by nature not long-term holder supply. And we were seeing a rise in this group while long-term holders were not really gaining any ground and their cost basis was falling. So all this was helping to inform my thesis. Now let's take it a step further. And I wanted to show you this, A, to back up the case we made in the previous video with additional data, but also to show you my thought process and the way I work through investigating a hypothesis. So I had this idea. We've explored it through a number of metrics. We saw long-term holder supply going flat while their cost basis declines. We see younger supply gaining market share. All of those factors are informing our thesis. And then when we go look at this chart here, we've got a few more data points. So down here at the bottom in yellow is the outgoing long-term holder cost basis. So every day, members of long-term holder that spend their coins have a cost basis that they are leaving from, right? That they are capitalizing on, whether it's in loss or in profit. And that value as a group of those people leaving each day is shown in this yellow line. Now, interestingly, as this group absorbed coins from the bull run on a 5 to 6 month lag, their cost basis rose 5 or 6 months afterward. Here's the bull run from late 2020, early 2021, and then 5 or 6 months later, the cost basis of long-term holders rising as members from here graduate into this group. So, as a natural byproduct of that group having members with a higher cost basis, any spending that comes out of that group has a higher price. So we see the outgoing spent price rising. So that's interesting. But what I've got here in the middle helps give a bit more detail to this behavior. So in the middle, we've got two cohorts and their spent volume each day. In the red, we have coins that are 1 year to 2 years old. The blue are coins that are 6 to 12 months old. And here up at the top, I'm showing you the current time frame that these members exist from. So 6 to 12 months ago is this blue box right here. And right now, if anyone spends coins out of this group, they appear in this blue area chart here in the center. If anyone spends coins out of the 1 to 2 year group, this big red box, they're in this red volume. Now, obviously, these windows are moving in time as we are moving. And so these cutoffs are based on today. So when you look back here at 6 to 12 month coin spending back here in July, back here in November, this blue box was back here in time at that point. So what we're really focusing on is the most recent point in time. Now we have some volume, this red area volume that increased here in early March. This is showing coins from 1 to 2 years ago being spent in a higher volume. And when this happened, the price, the average outgoing price of long-term holder supply went down. So when I see this declining while coins from 1 to 2 years ago are rising, that tells me that the coins that moved from 1 to 2 years ago have a low cost basis. They have such a low cost basis, they caused a big dip in this otherwise curling up metric. Now it is slightly volatile, but there's a notable dip here when there's an increase in 1 to 2 year coin volume. So that tells me that this little spending right here contained a fair amount of coins from further back in history, probably from before this 40K breakout, further back in time. And so that cost basis as a group pulled this outgoing spent price down. But here just recently, you've seen this spike, this blue spike in 6 to 12 month coins at the same time that we see the highest outgoing price for long-term holder supply that we've ever seen on this metric. Whoever spent coins on this particular day out of long-term holder supply had an average cost basis in the middle 30,000s. That is an extremely high price for a long-term holder of Bitcoin. That's less than $10,000 away from the current price. And so these people have a very low profitability. They have not built very much conviction. And as we discussed in the previous video, because of the nature of this market cycle, since we had this big bull run and then we had a 50% correction, and then just a matter of 4 or 5 months after the previous all-time high, we were right back in the same trading range again. That dynamic prevented people that held their coins from this part of the market from developing the same kind of conviction that is forged in a true crypto winter, in a true bear market. This bear was very soft. Now it felt dramatic. It felt like it took a long time because we're at the end of a long-term debt cycle. There's a lot of global upheaval, a lot of macroeconomic complexity. So the bear market we experienced, it felt agonizing, but in truth, it wasn't very long. And for Bitcoin's history, it's one of the mildest ones it's ever experienced. And by seeing long-term holders have to weather this correction and then immediately start spending up here at the top again by seeing these 6 to 12 month coins getting dumped out at the all-time high. These are people who bought right back here. There was no conviction developed during this time. Price didn't fall far enough away from the top and not enough time went by. So there's still a fair amount of weakness with these middle-aged hodlers. These hodlers that have not been around quite long enough that we could consider them diamond hands. They haven't weathered a full market market cycle yet. And seeing where we are now with price, they're looking out at the economic landscape. They're seeing the war in Ukraine. They're having all this worry about being able to buy their groceries. And what are they doing? They're spending their coins rather than sitting on them. So I thought that this was interesting. I think it helped corroborate part of our theory. And it also is a factor that I think we need to keep in mind over the next couple of months. If we see price continue to constructively develop, and if we start making our way back up to 50,000 or maybe even higher than that, I really want to see the behavior from this group not quite resemble what they did in October and November. This kind of overhead supply is not going to be a constructive development for price action if we have the same level of demand that we had back here, which was softer, which wasn't palpable enough to overcome this spending pressure. So that's what I've got my eye on. I think it's one of the more relevant factors on chain to be focusing on in the next couple of months is the possible weakness of the current long-term holder group. So as we discussed, we did get a positive curl here around the area we expected, and it's possible we might get a slowdown here in the middle 43s before we decide the next direction of this rally. We touched on elevated put volumes in Bitcoin options. It shows a defensive positioning here as we are what looks to be curling off of local lows. A development to keep an eye on, to be sure. And continuing our study of newer hodler weakness, we explored the falling cost basis of long-term holders. Corroborating some of our thesis from the previous video, we see high outgoing cost bases from this group, showing that these hodlers have coins very near to the current price. And we see an actual spike here of spending volume recently from the newest members of this hodler group, corroborating our thesis and giving us some level of detail for the kind of activity we're seeing on chain right now. And it is something that I think is concerning, at least mildly enough to have it in the front of my mind as we continue to develop off these local lows. Make sure you're following me here on Twitter at TXMC Trades. I'm very active on Twitter. I post a lot of my thoughts and analysis on here, so make sure you're following me. And that's what we had to talk about today. There are some constructive price action developments, but it's too early to ring the bull bell. I think we may slow down in the middle 43s, and this afternoon I'll be listening to Jerome Powell and observing how the market reacts to whatever it is he has to say. And we'll leave it at that, friends. If you have any questions for me, if you have feedback for this channel or any topics you'd like me to explore in a future video, make sure you leave it in the comments below and I'll go through them. If you enjoyed this content, make sure to give my video a thumbs up and please subscribe to the channel. As we head into the weekend here, we'll see how the market shakes out and we'll talk again in a couple of days. So until then, friends, you know the drill. Take care of yourselves, be kind to each other, and we will chat again very soon. Cheers, everyone.